Good evening. Thanks so much for joining us. The top business stories today. Tensions between the US and China are escalating at a rapid pace. In the first part of the show, we have analysis on the economic impact. New details on the upcoming stimulus package. The Treasury Secretary says they're looking to replace the $600 weekly unemployment benefits with a 70% wage replacement. More American workers are filing jobless claims. The number rose last week after falling for several months. And another clothing retailer has fallen victim to the pandemic. Ann Taylor's parent company is filing for bankruptcy. Morgan Stanley is blocking its Chinese interns from accessing its virtual network. Foreign companies have been increasingly concerned over China's tough cybersecurity rules. Experts say because of the complex rules in China, firms don't want to risk having interns break the rules in an unsupervised environment, such as when they work from home. The interns were supposed to do virtual programs, but the bank say it will provide in-person training for its Chinese interns instead. Another large U.S. bank says its systems in China were exposed to frequent cyber attacks. It says the cyber attacks were infinitely greater than in many other countries. Though the private sector in China is worried, President Trump had insisted China would honor its Phase 1 trade deal obligations. It was just signed 6 months ago, if you remember. Feels like an eternity. I wanted to ask Daniel Akala earlier if he thinks China will be able to make it happen. Daniel, great to see you again. We see over the last few days, and not just the last few days, at least from a political perspective, relations between the US and China deteriorating very, very rapidly. We see the consulate issue, we see threats of banning TikTok here in the United States. One area that I've noticed that President Trump has tried to give China the benefit of the doubt is the Phase 1 trade deal that he signed earlier this year. Now, I don't know. What are your thoughts? Will China, President Trump has always said he believes China will be able to honor this. I've always had my doubts whether they intended to, but looking at the data and analyzing it yourself, what are the chances of them actually honoring this deal?
I think it's going to be very difficult. There's a couple of things that we need to take into account. The first one is that in the process of this crisis, in this period, the Chinese economy has not opened. It has actually closed further. Capital controls remain. The idea that there was going to be a significant change in terms of intellectual property has not happened yet. There are also conflicting messages, because if you think about it, on one side we hear from the officials in China that the economy is back above the levels at which it was before the COVID-19 crisis, that the economy is growing in a strong way, yet the data in terms of imports from the United States, in terms of all of the things that were supposed to be implemented by now from the trade deal are actually not happening. It is true that GDP in itself doesn't tell us a lot, because if we look more granularly at the data from China, what we see is that the recovery is slower and more challenging than what the headline figures show. Consumption in terms of also gross capital formation, etc. But it is true that even if we think about a recovery, it is going to be extremely difficult for China to honor the Trade 1 deal, the first phase, because the reality also is that it's going to be very, very difficult for the country to increase massively the imports of commodities, of soya, of natural gas in an environment in which the output gap will remain high. And at the same time, most of the growth that we are seeing so far this year comes from a very large increase in debt.
And what does it mean to China as, one of the top two, some could argue, superpowers in the world? If this decoupling, particularly economic decoupling, continues, how will things work for them?
It is going to be difficult to, on one side, present an environment of high growth, full recovery, everything is fine, and at the same time be unable to comply with the phase one trade deal. It makes it very difficult for a second phase to arrive. It makes it very, very challenging for the relations between the United States and China to improve. And also, at the same time, we are not seeing the improvements and the opening of the economy that we all expected would happen in these first months. It is true that we are all suffering from the COVID-19 crisis, but there's almost an impossible dichotomy here between the official message that the Chinese economy is going to be the only one that is completely unaffected by the COVID-19 crisis, and at the same time show in the figures that imports and that the improvements in intellectual property and improvements in financial market and capital controls are not happening.
Daniel, I appreciate your insight. We'll catch you again soon. Thank you.
Thank you very much.
An update on the next stimulus package. The Treasury Secretary says they're considering a 70% wage replacement instead of the $600 enhanced unemployment benefit. NTD's Miguel Moreno has more on what the deal could look like.
Treasury Secretary Steve Mnuchin went over a few potential pieces of the next stimulus package expected to be revealed soon. Mnuchin mentioned that they don't plan to extend the $600 of enhanced unemployment benefits. Instead, they're looking to give 70% of an unemployed American's lost weekly wages.
The unemployment insurance, we're going back up to see the new language and work through that, but I think we're very clear on we're not going to pay people more to stay home than to work. So we're looking at something that looks like a 70% wage replacement, and we're working on the mechanics of that.
The current $600 enhancement benefit goes on top of the recipient's unemployment check. That benefit is set to expire this month. There is speculation that the unemployed may receive $200 to $300 less a week in extra benefits. Last week ended with over 1.4 million initial unemployment claims. Contrary to the Republicans' expected $1 trillion stimulus package, Democrats are unified behind their $3 trillion HEROES Act. The Democrats' plan would extend the $600 extra unemployment benefit till next year. Mnuchin also mentioned that the administration is apparently considering $105 billion for schools and $25 billion for COVID-19 testing. Miguel Moreno, NTD News.
Mnuchin says proposals on direct payments in the deal would mirror the last stimulus package. That means another round of $1,200 stimulus checks may be included. And Wall Street stumbled today. The latest job report shows more people applied for unemployment last week. Technology stocks saw the sharpest drops despite a better than expected profit report from Microsoft. S&P 500 had its first loss in 5 days and its worst in 4 weeks. Gold rose again to reach its highest price in nearly 9 years. Today the Dow fell 354 points. It's down about 1.3%. S&P 500 fell 40 points, or down 1.2%, and the Nasdaq fell 245 points, or 2.3%. And after falling for 4 straight months, the number of American workers filing jobless claims rose last week. This suggests the labor market recovery is stalling.
The number of Americans filing for unemployment benefits rose last week for the first time in nearly 4 months. Labor Department figures show that over 1.4 million American workers applied for unemployment benefits last week. This is the first increase since March, when it peaked at nearly 7 million. The rise in unemployment claims suggests the labor market recovery is stalling during a surge of COVID-19 cases and depressed demand. Authorities in the hard-hit South and West regions have moved to shut down businesses again or put reopenings on pause. And small business hiring has slowed in these areas. The data shows the biggest increases in jobless claims for the week before last were in Florida, Georgia, and California. In the first week of July, there were nearly 32 million American workers receiving unemployment benefits across all programs. In the comparable week in 2019, that number was 1.7 million.
A new study estimates the Paycheck Protection Program helped save about 2.3 million jobs through the first week of June. The study said the program boosted employment by at least 2% and maybe up as far as 4%. The study was based on data from a payroll processor through the first week of June. It didn't analyze PPP data directly, though. The research suggests giving money directly to companies helped curb job losses during the pandemic. The program was intended to serve as a lifeline for the nation's smallest employers. The stimulus program has distributed over $500 billion in loans to small businesses. So $500 billion to save 2.3 million jobs. It's about $217,000 per job. Interesting numbers. And still to come, we'll get a look at some of the products that are doing well as people work from home. You may have bought some of these yourself. And the latest retailer to file bankruptcy is Ann Taylor owner Escalate. The company will survive a permanent shutdown, but at a cost. Find out more after the break.
Hello there. Doesn't it feel like we're moving further away from the very values that our republic was built upon? And the media in our country have just been adding fuel to the flame, which is why you need to try The Epoch Times. It's pure, honest journalism that's restoring traditional values and reports the news with no spin, no hidden agendas, and no false narratives. So if you want to know the truth about the FISA abuse that took place during the 2016 election, or how socialist and communist ideologies have been infiltrating our society, or how the Chinese Communist Party's cover-up led to this global pandemic, and so much more, then you need to try The Epoch Times. And for a limited time, you can try the paper yourself for a full month for just $1, and we'll send you a very special gift. A 58-page magazine that investigates the truth behind the Chinese Communist Party's cover-up of the virus. So go to readepoch.com, try The Epoch Times, get your free gift, and stay truly informed.
As we touched on earlier, we've seen a remarkable escalation in US-China tensions over the past few days. I spoke earlier with Casey Fleming, CEO at Black Ops Partners. Casey's been studying America's relationship with China for over a decade. Here's what he had to say. Casey, it's great to see you again, and thanks so much for coming on.
Thanks. Glad to be with you today.
Casey, we've seen a significant escalation in the US-China conflict over the past few days. Is this a warning shot to China, or has the US finally gone beyond warnings?
I think it's absolutely a sea change. It's gone past warnings to action, and it denotes the seriousness and the significance of the China threat to democracy, to the United States, and so on. So it's gone past the warning stage. It's now into action stage.
And what are we seeing here? Of course, we had very visuals of them burning things at the consulate. We see there's even the FBI saying that there's people holed up in the San Francisco consulate. What exactly are we seeing here?
You're seeing that the Chinese Communist Party in the past has looked at the United States as saber rattling. Nothing's going to get done. We don't have to worry. We can continue the espionage, the infiltration, and the subversion without any really countermeasures coming from the United States. What they're seeing now is they were given 72 hours to vacate the consulate in Houston. And you were seeing them burning documents in the courtyard in 3 different areas, two 55-gallon drums and then some bin that you actually saw them burning documents. Now, the question is, why would they be burning documents if they're just asked to leave? So that's really underscores what's going on. And that's a significant consulate in Houston. It covers 8 states, including Florida, which is also another hotbed for espionage and subversion from the Chinese Communist Party.
And I want to ask you about something that came up, I think it was probably last week we heard it escalate as well, even before this consulate, was we had Mike Pompeo coming out and saying that the U.S. is considering banning Chinese apps like TikTok and WeChat. Now, TikTok have come back and they've said, well, we're an American company, and they've said we're going to hire 10,000 new workers here in the States. In the United States, of course, we have a free market. Should they not be allowed to operate here? Why would they ban them?
We've been doing this a long time, over a decade, being China experts with intelligence on China and their strategy to destroy democracy and the like. The number one thing that I can communicate to my fellow Americans and everyone else in the free world is that the Chinese Communist Party is fully intent on destroying democracy and taking over the world. And it sounds, George Orwellish, if you will, and tinfoil hat stuff, conspiracy theory stuff. But when you live this every day, 7 days a week for over a decade, it's beyond real. It's like an emergency room doctor, if you will, that is used to seeing this all day, every day. And after the first couple of weeks, it's not a shock anymore. So number one, Americans need to understand China is not what we want them to be, what we perceive them to be. China is led by a communist regime that is it's extremely evil if you look at the way they've treated their own citizens and the history of their past, and even what's happened with the coronavirus, their response, and specifically their actions after that. So all you have to do is just connect those dots, and you're able to see that it's a very, very nefarious regime.
And very quickly, where do you think this will go from here? Will we see a full decoupling like Trump and some other people have not hinted at, but have talked about the possibility of, or where will we go from here?
I think you're going to see a total decoupling because you're seeing that the CCP cannot be trusted. Just look at their actions since January in dealing with the virus, and then their actions since. While everybody's busy fighting the virus, they're taking all these geographic land grabs with Hong Kong, India, South China Sea, Vietnam. I mean, you just list it. Taiwan, those kind of things. Even Germany and France, they've got some scuttles there, as well as Australia. So, I mean, that's in the last 6 months, for heaven's sake. So, I mean, the CCP is showing their true colors. I think you're going to see a full decoupling because the risk is now presented itself with our supply chains and how well we've been embedded with the Chinese Communist Party from an economic standpoint and as well as a diplomatic standpoint.
It's been an incredible escalation, and really appreciate your insights, Casey. Thanks so much for coming on.
Thank you for having me.
And FYI, the Black Ops Partners LinkedIn page does an awesome job of connecting the dots on these types of things. I recommend you check it out. And the parent company of Ann Taylor and Lane Bryant has filed for Chapter 11 bankruptcy. Ascena Retail Group operates nearly 3,000 stores, mostly at malls. It's been struggling with debt and weak sales for years. The company has reached an agreement with creditors to reduce debt by $1 billion. That's more than half of its stores will need to shut down. It's got $150 million of new funds to keep operating during its reorganization. The company is the latest of 40-some retailers to file for bankruptcy this year. But some consumer products are seeing success during the lockdowns. Consumers are looking to products to improve their time at home, like technology or cleaning supplies, or both, like the robot vacuum.
Consumers staying at home are reaching for more pantry staples like mayonnaise and peanut butter. They're also buying Roomba vacuum cleaners and computers. As companies report quarterly earnings and look to the second half of the year, pandemic winners and losers are becoming more apparent. Companies that sell electronics, comfort food, and other products for the home continue to benefit from the lockdowns. Retail consultant Daniel Binder said consumers are embracing technologies that enhance their at-home lifestyle, whether through entertainment or assistance with chores around the house. Best Buy's online sales jumped thanks to electronic sales, and iRobot is also seeing growth in demand for its robotic vacuums. Feel-good foods are also doing well. J.M. Smucker, the company that makes Smucker's jams and Jif peanut butter, also raised its dividend, while many other companies are slashing payouts. Unilever also reported strong sales of ice cream, mayonnaise, and soups. Unilever CEO says they see no signs of slowing down in the North American markets.
As more employees return to work, a large percentage of U.S. companies are implementing contact tracing programs, but their efforts may collide with data privacy laws.
A survey of over 300 U.S. companies found 54% had already implemented or were in the process of starting a CCP virus contact tracing program. Among those surveyed, 42% are using current employees to do contact tracing, while 3% plan to use smartphone apps or wearable devices to track employee contacts. Experts say contact tracing is like detective work. Infected patients are tracked down and isolated to avoid virus spread. Then tracers work with the patient to understand who they've been in contact with. The Centers for Disease Control and Prevention, or CDC, says that risk of infection begins when someone is within 6 feet for 15 minutes or more. The measures are also raising privacy concerns. Currently, there are 3 Senate bills aimed at regulating the collection of data on personal health, geolocation, and proximity.
A new poll by Monster found that 69% of employees say they're burned out from working from home since the pandemic began. That's almost a 20% increase since May, but despite the burnout, 42% say they don't plan on taking any time off to relax. In fact, the majority are taking less time off than they normally would. This may stick around for the long term. Almost half of the poll takers are exploring a permanent work-from-home situation. And over a third of employers expect to reduce the number of workers in the office at any given time. And still to come, Tesla picks its new factory location. CEO Elon Musk says it will be an ecological paradise and open to the public. That and more after the break. The competition for the next Tesla factory is over. Tesla chose Texas over Oklahoma. The company told state officials it will create thousands of jobs.
Tesla CEO Elon Musk says the company will build its new Cybertruck factory near Austin, Texas. The 2,000-acre site is about 13 minutes from downtown Austin. Musk said it's going to be an ecological paradise open to the public. Tesla's new Cybertruck and its heavy-duty semi-truck will be built at the Texas plant. The Model 3 and Model Y cars for Eastern North America will also be built there. Tesla told Texas officials the plant would create at least 5,000 jobs. Musk and Tesla would consider site runner-up Tulsa, Oklahoma for future production. And Tesla posted a profit for a fourth straight quarter. Despite the pandemic disruptions, Tesla stuck to its target of 500,000 vehicle deliveries for the year. Tesla shares rose 4% in extended trading. The automaker will also beat Wall Street's expectations for total vehicle deliveries during the quarter and beat analysts' revenue expectations by $500 million. Tesla posted a profit of $2.18 per share. CEO Elon Musk qualified for a payout worth an unprecedented $2.1 billion. It's his second jackpot since May from Tesla, following its massive stock surge.
Qantas Airways' last Boeing 747 jet drew a kangaroo just like the company's logo in the sky off the Australian coast. It made its final flight in retirement in the Mojave Desert, ending the model's almost half a century of service with the carrier.
The final Boeing 747 flight took off from Sydney at 2 p.m. local and touched down at LAX airport at 1:23 p.m. local. Owen Zupp, one of the 6 pilots on board the final flight, brought forward by several months because of the pandemic, said he would reflect once the team had delivered the plane safely to the United States.
Once that's done, I think it will be a memory that we can look back on with a degree of pride. It's played such a significant role, not just in Qantas' history, but aviation.
Qantas chief executive Alan Joyce said the model had helped make international travel more affordable for Australians.
With overcoming the tyranny of distance, with giving people the ability to see family and friends again, with giving people the ability to see the world again.
Qantas 747s carried more than 250 million people in almost a half century of service, including every Australian Olympic team since 1984. Qantas was once the world's only airline with an all 747 fleet. Qantas posted an animation of the flight path to Twitter and said the journey had a special display en route to the U.S. The jumbo jet will fly from LAX to Mojave, California on Friday, where it will be put into storage.
That's the latest business updates for now. Thank you so much for tuning in. We'll see you again tomorrow.